Hi everybody, this is the investing teacher, high school science teacher, teaching others how to invest. In this video I want to go over time decay, how time decay works with options, and how I'm going to apply that for my 2% a month challenge and different time periods that I'm thinking about for my options. Let's get right to it. Okay, so here's some of the basics of time decay, or theta. I'm following the theta gang on Reddit, where I'm looking at different possibilities on what we're going to quote on. So this is for Bank of America. It's not a high implied volatility stock. Right now, the stock is pretty much right at $30 a share, $29.80. And let's look at what the put options are for the same exact strike price. That means it's at the money. Let's go about $30. If we wanted to sell a January 8th strike cash secured put at 30, we're getting between $56 and $58. Go out a week more, we're up to $83. Another week out, $102. Another week out, $111. So you can see that it's increasing over time, but doesn't necessarily increase at the exact same level each week. If we go out to, say, February, we're going to go a month out at this point. So month is 127. Go out to March, we're looking at 192. Even April, we're looking at, I don't have an April, but if we're looking at May, it'll be 254, and so on. So time decay makes the prices of these options worth less and less as you get closer to expiration. For most people, they're going to typically do weekly options or monthly options, is what I'm planning on doing on my channel. So if we have January 18th on Friday, 0.56 to 0.58 is an at-the-money call. If you divide those two numbers, you'll get your percent increase. So for 30, let's say we get 56. 0.56 divided by the 30 and the strike price, we're looking at a times that by 100, 1.86 gain in a week. Okay, now my goal in this challenge is to get 2% a month. If I simply did at the money and it never exercised or got to that price, I could theoretically make about 1.8% per week. Now, of course, that's not going to happen. The stock will be moving up and down. Let's look out to the end of the month. So if we go to January 29th, it's about 1.11 divided by the 30. We're looking at a 3.7% gain in the month. So almost a double gain in percentage for the monthly compared to the weekly. One of the reasons why you might want to go weekly is the time decay does go down pretty quickly, obviously. The monthly ones, however, you have a little bit more options on what you could do with your option. So if you're starting to go down in value and getting out of the money, then you could roll up, start down and out in a put, roll up and out in a call. You could possibly buy it back at a certain time. And the weekly ones is a little harder to do that because the theta decay is so much quicker. So again, this is Monday, January 4th. Let's look at the cash secured puts that I put up so far. PSTH, strike price of 25. Right now, PSTH is down about 4%, but we're at 26.65, so we still have plenty of time for it to remain above 23 if we need to. We still have SRNE, strike price at 5.5. SRNE is 6.92, looking pretty strong here. For the strike price, I left the date of expiration on the 15th, so only 11 more days. It's a good chance that this premium will be going down pretty quickly, so I might actually buy to close it. Remember, my rule is to buy to close it at about 75% gain. So if I could buy to close at about $15 in the next few days or so, I'm probably going to end up doing that. The next one is PLTR. PLTR has a slightly up day, but we are at 23.69, and I sold the catcher put at 27, so there's a very good chance that this will expire, and then I'll most likely be selling covered calls on that, and I'll show you what I'm doing on that in the next video next week. CRSR, Corsair Gaming, strike price at 30. It's down a bit today. We're at 34.48, so we still have some buffer there. For Corsair Gaming, that's another one that will expire in 2 weeks or so. So there's a good chance that Hopefully it'll stay at a pretty high premium. And HYLN, strike price of 13. HYLN says a strike price of 15. It did go down a bit today. There's a good chance that that might get exercised as well. When we're looking at high implied volatility stocks, we're looking to see if we can get at least 2% premium per month. And when I was looking at these deltas, they're all 0.2 or less, except for my PLTR that I did in the beginning of the year, or end of last year. My total profit would be 4.8% if all of them went worthless. So I do have some room for error in case any of these do become in the money, and then I'll have to actually buy 100 shares because these are all cash secured puts. But the time decay is definitely something you want to be interested in to look at how fast it goes down. And as the investing teacher, high school science teacher, teaching others how to invest. If you have any questions, thoughts, or comments, leave a comment down below. I'll read and respond to all comments.